protection, entrepreneurship, and capital markets is now recognized for 5 minutes.
American wages are too low. Those opposed to unionization, progressive taxation, and others' efforts to put money in the hands of working families have a solution. Tell working families, go play the stock market every day, every hour. And if you don't get rich, if you can't get by, don't demand higher wages because it's really your fault. You're a bad day trader, which is the same as being a bad person. Casinos and lotteries pay high taxes. Real investment in equities finances our economy. It's hard to see how day trading has any ascertainable social benefit. I want to commend Dr. Bogan for pointing out that zero commissions does not mean zero cost to investors. It just means zero disclosed costs. The main cost is the spread, the difference between the bid and the ask. And the gamification drives you to this, but also the illusion that Robinhood is able to create that there's no cost to you because there's no commission. And Dr. Bogan points out the gamification, the nudges, the confetti. And I would just want to say that if you want an exciting video interface, go to GameStop and buy a video game. It's not a reason to go to Robinhood and buy GameStop. Mr. Keller, thank you for pointing out that just saying investors have never had it so good is hardly an answer. I'm not going to send a love letter to T-Mobile because my phone is cheaper and better than it was 20 years ago. I expect to get the lion's share of the benefits of technology. Now, during the last hearing we had on this subject, I asked the CEO of Citadel, Ken Griffin, whether the customers of Robinhood get the same trade execution quality as customers of Fidelity, a broker that does not accept payment for order flow. Mr. Griffin twisted, turned, filibustered, did everything to avoid giving me a straight answer. That's why I want to commend the CEO of his, perhaps his number one competitor, Virtue Financial, who went on CNBC and said, and I'll quote, overall, though, during the course of a month, we will provide more price improvement to Fidelity than we do to Robinhood. Now, of course, Fidelity charges zero commissions for online trades, but Fidelity does not accept payment for order flow. So clearly we could have no payment for order flow and zero commissions. Further, payment for order flow offered by market makers was banned in the UK almost a decade ago, and their markets continue to function well. Is there any reason the U.S. shouldn't take a similar step of banning any payment to brokers when they're acting as an agent for directing their order flow? Go.
No, Congressman Sherman, thank you for your question. It can be banned and it should be banned. It does not mean that the intermediaries will not be well compensated. They will still be well compensated because they can be compensated on a spread. And what it would do if you banned payment for order flow, it would have the additional benefit of driving a lot more trading to the public markets, which now are less liquid and have less trading because so much of it is being skimmed off, about 47%. And we detail this in Appendix C of my testimony. 47% of all the trading is flowing into dark, unregulated, low investor protection, non-disclosure markets by these internalizers who are using legalized kickbacks and payment for order flow to executing or to retail brokers like Robinhood. And everybody's getting rich, but that money's coming from somewhere. And where it's coming from is the pockets of retail investors.
And I'll point out that even if I get a good execution of my trade in one of these dark pools, the country is deprived of information about that trade that would be available if we traded on a market.
Exactly.
I'll just also point out that we live in a strange world where some people get best execution and some get price improved best execution.